Hello there. So welcome to chapter 3. Now we're going to be looking at the stock in profit trading system models. Okay. Now this is what I believe we've all been looking forward to, and I'm excited to share with you at this point in time the trading models version 2.0. So we have 4 trading models. So the first one is SIP model A, then B, then model B, then model C, and lastly model D. So we're going to be looking at all of this, and by the time we're done with this, you would have a very super clear blueprint to go conquer in the market, such that you know what you're looking for. Like literally, you know what you're looking for. If you don't see it, you don't trade it. It's as simple as that. Okay, are you ready? All right. So let's get right on to doing this. Okay, so ladies and gentlemen, this is the version 2.0 of the stock in profit trading system, and I'm excited to share this with you. Just to mention that you may likely have received, or you should have received, a coupon towards getting this a percentage off. If you want the hard copy PDF, if you want it, then you can of course download it. So this basically contains everything that you need to know, from the flow chart to the charts, the trading charts themselves with examples, and also the models that you should look out for. So this is complete. I'm excited for you if you have this. And then also just to mention a few things that we have here on the homepage. So the stock in profit strategy, the course itself is what of course we're doing right now. We're going through the stock in profit app. Most likely at the time of recording this, the app most likely is launched already. If not, it's going to be coming in stream. But the stock in profit app is going to be the best journaling app for professional, for serious traders, and I'll encourage you to subscribe to it, because it's going to really help you show the models that are working, what is working, what is not working, and help you improve in the long term. And the stock in profit mastermind, of course, is a community of traders which you can also join if you want to join, where I trade daily live with traders who subscribe to the mastermind. All right, with that said, let's look at the trading models. Now, how to use this? First of all, disclaimer first, that these markups are only provided to aid your understanding of price action and market structure. So you would have, of course, to identify this in a live market, for you to really use them and also practice same. So do not construe this as a signal service. It is not, of course. Now, all you need to do to utilize this well is to make sure you study the setups, the chart examples as shown in the models, and also in the stock and profit course. Watch relevant trade review and recap videos, in the library, backtest the models yourself on TradingView, practice the entries on a demo account and journal your trades, and also be fearless. And lastly, be fearless and execute in a live market, personal funds or prefer. Okay, so this is me to you saying, take the bull by the horn and go at it. All right, so the first model we're looking at is the SIP model A. Now, this is a flow chart that helps you to decide if you should take a trade or not. Now, the first thing you have to do is analyze price. So on the 4 hour and the 15 minutes, analyze your price. You have to establish structure first. So as always, you start with structure. You start with structure. Identify structure on the 4 hour. Where is the market going to? Where's the market coming from? Is it where they're going to? Go down to the 15 minutes, do the same thing. Where's the market coming from and where is it going to? And then, so when you've done that, you've mapped out your POIs, your demand supply zones, you've gotten the market bias, you've identified your structure, your highs and your lows, so you're super clear. The next thing to do is the 4 hour structural bias obvious? You have to ask yourself that question. If the answer is no, then you do nothing. That means you've not established structure on the 4 hour, then you have no business trading. If the answer is yes, then you proceed to the next level, which is on the 15 minutes, do you have all of this? Liquidity sweep, bourse, times 3, break of structure times 3, and also inducement. If the answer is no, then you do nothing. If the answer is yes, you have all these 3, then you execute. This is important for model A. This is a simple flow chart you just need to follow. If you follow these things, this is a checklist. If you follow them, then you're super good. Okay, now next you can see here on my left hand here we have this the setup essentially that we're looking out for. So what are we looking out for? So first you can see here break of structure 1, break of structure 2, break of structure 3. So 3 break of structures. Okay, and then we have liquidity sweep. So the second break of structure, the second structural formation took out the first structural formation, so essentially creating for us a liquidity sweep, which also led to a liquidity, a sweep zone, right? We've looked at this before. Now, in the third structural structure, is this structural structure? No, that's tautology. This third structural formation, has now created for us an inducement, and price returns, sweep the inducement, and then continues its movement. Okay, so this is essentially what you're looking for in model A. If you don't have all of this in model A and you say you're trading model A, then you're trading something else. It's definitely not model A. To trade model A, you need 1 sweep, 3 break of structures, an inducement, and then you're good. So once again, let's look at the flow chart. So what are you looking for in the 15 minutes? Liquidity sweep, 3 break of structure, and inducement. If you have all of that, you execute, or if you have all of those, you execute. So once again, what are we looking at? Liquidity sweep, 3 break of structure, inducement, and entry, and we're good. That's model A. And here on the right hand we have an example chart. You can see here we had liquidity sweep, the first one first, 1, 2, 3 break of structure, inducement, price return, sweeps the inducement, and then continues to the upside. Okay, so this is essentially what you're looking for model A, right? So checklist, high time frame and medium time frame price action bias established, break of structure times 3, liquidity sweep, and inducement. As simple as that. Now, this is the rules for consistent result. Long-term success in trading will require that you commit to following the setup without deviation. Take profit at 1 to 3 or swing it to the previous higher low if the setup permits, of course, using the trade management models we looked at earlier. This is as simple as it gets. Okay, and I want to believe it's easy for you to follow. Okay, this is as easy and simple for you to follow. So you just need to take this every time you see price action. You just need to know, is this model A? If you have a sweep, then maybe it's model A building up, and then you just need to make sure all these checklists are in place, and then you take the trade. As simple as that. Now, this is for the bullish price action. For the bearish price action is similar, the same thing. You have liquidity sweep, okay, break of structure 3 times, inducement, entry, and then sell. You look at the chart here on the left, on the right hand, you have the same thing, liquidity sweep, break of structure, inducement, price return, taps into this, and then sells off. The same thing, literally, that's what you're looking for. Okay, so ladies and gentlemen, this is model A, as simple as that. Now let's look at the next one, model B. I want to believe you can see that trading just needs to be simplified. There's really nothing complex there. The most important thing is that you understand the strategy, and then you back it up with the discipline to make sure you implement just what you need to implement. No deviation. That is where the work is. Okay, so now model B, what do we have? The flow chart first, you analyze price as always, map out your POIs, get your market bias, identify structure. Is the 4-hour structural bias obvious? No, do nothing. Yes, then look for this on the 15 minutes. Do you have all this? Boss times 2, an inducement? No, do nothing. Yes, execute. Simple. Boss times 2 bosses, and 1 inducement. Okay, so what do we have here? Now look at the setup here. You have here the first boss, 1, 2, perfect. Creating an inducement for us, price return, sweeps the inducement, taps into the demand zone of the first structural formation, and then we have a continuation. Simple as ABC. You look at the chart here, for example, we have here first structure, 1, 2, creates an inducement for us, price comes, sweeps the inducement, taps into the demand zone, and then continues. As simple as ABC. Okay, I hope this is really helpful to you. Now let's look at the bearish market. The same thing too. You have boss 2 times inducement, price sweeps the inducement, taps into the supply zone and then sells off. You look at the chart on the left hand, on the right hand rather, you see it. Structure 1, structure 2, price sweeps the inducement, taps into the supply zone and then sells off. As simple as that. Okay, this is SIP B, model B. Okay, so what is the difference if I had to ask you between model B and model A? Let me see if you're able to spot it. If you are, just put in the chart. What's the difference between the two? Okay, have you written in the chart? I want you to write something. You can of course update it, but just to have a way of exercising your brain to note the difference. Well, the difference is this. Okay, the difference is that model B has no liquidity sweep. Yes. Okay, I hope you get that. There's no liquidity sweep, right? So if you look at the previous model, what do we have? Let's look at it. We have this liquidity sweep. Can you see that? But model B does not have this liquidity sweep, just has the first structure, inducement, price taps into it and the sell. So this entire structure here is not in model B. Okay, all right, so I hope that makes sense. So you can see basically what we have, okay, for model B. So the difference is model B has no liquidity sweep. You just have the two structural formation, liquid and inducement of course is constant, sweep and then continuation, and that's what model B has for us. Okay, now let's look at model C. Okay, these are just simple things. Sincerely, it's a discipline to follow. That's where the work is. Okay, but understanding this is super simple. Now model C, what do we have? The same process. Analyze price on the 4 and 15 minutes, map out your POIs, get market bias, identify structure. Is the 4 hour structural bias obvious? No, do nothing. Is it obvious? Yes, then look for the following: liquidity sweep, boss times 2 and inducement. Okay, if yes, execute. If no, do nothing. So let's look at what we have for model C. So for model C, we have liquidity sweep, we have the boss 1, 2, okay, then we have this one. This structure here is also the third structural formation. However, it doesn't take out the previous high, so it's just engineered inducement, as some people call it. So the inducement is engineered just ahead of the demand zone, and when that creates you see the inducement, price returns, sweeps the inducement and then continues in its bullish direction. Now this usually would happen sometimes in a very bullish market where the market is strongly bullish, and also for very volatile pairs like gold, Bitcoin and some of these pairs. So sometimes you may not have a full breaker structure that creates the inducement before you get a retest and then a continuation. So here's an example. Here we have structure, liquidity sweep, price returns to that demand zone, but just before the demand zone, it creates an engineered liquidity, taps into the demand zone and then pushes up. Okay, as simple as that. The same thing also, you look at the bearish market, liquidity sweep, inducement, price does not take out the previous low but creates an inducement, taps into it and then continues, engineered inducement, right? Then you also have the chart here that shows you that you can see that sweep, right? Low, price comes close to the supply zone, engineers liquidity, inducement rather, price taps into the supply zone and then sells off. Okay, so that is essentially that for that. Now the last model is SIP model D. Now with model D, you're gonna see what the difference is, but for the flow chart we have the same thing. Analyze price, map out your POIs, get market bias, identify structure. Is the 4 hour structural bias obvious? No, do nothing. Yes, look for this. Do you have all this? Boss times 1 and inducement? No, do nothing. Yes, execute. So let's see what that looks like. So here you can see we have boss, we have this engineered inducement ahead of the demand zone, price returns, clears the inducement and then moves. You can see that here. Okay, break of structure, price returns ahead of the demand zone, clears an inducement, doesn't take out the previous high, comes back, sweeps the inducement and then continues. As simple as that. Okay, we'll look at the bearish market, the same thing. boss, price comes ahead of the supply zone, engineers an inducement or liquidity, as some people call it. Price returns, sweeps that inducement, taps into the supply zone, and then sells off. And you see that also here. The same thing, sells, engineered inducement or liquidity, price takes out that, and then sells off. As simple as that. Okay, so these are the 4 models, for the stock in profit trading strategy, or the trading system. And this repeats itself over and over and over and over again in the market. Now, just to test if we have, or if you have a hang of this, let's look at examples of these models in the chart. Okay, let's do this together. So let's start with Bitcoin. Yeah, I had drawn a few. So let me see if you can identify this. Now, the assignment I'm going to give you is this. Go onto the chart, pick any pair of your choosing, and look for the models, and then map out those models and place the name. So for example, here we have liquidity sweep, okay, sweep zone, inducement, price return, taps into that, and then sells off. Okay, so what model is this? Let me see if you get this. Is this model A or model B? Let me see, somebody gets it. Okay, well, so this is model A, because we have here a sweep of liquidity, essentially telling that model A. If you don't have that sweep of liquidity, that essentially becomes model B. Okay, depending on how you look at it. Now, this one, it's really not so much of model A. I think I'm just seeing something here. Look at this. This is actually the main breaker structure. Let's take it out, because that's one structure: low, high, low. So I think this is one structure. This is actually model B, if you look at this very well. So this is model B. Price sweeps this high, taps into the supply, and then goes. So that's model B, because we didn't have that sweep right there. So that is that. We can look at any other structure and you see something similar, the same thing literally, all over the place. So if we look at, for example, let's say EU, let's see if we're going to get something. Let's get some recent, price action, if we're going to get anything with respect to that. That really just fits the model I want to show you. I could, of course, also show you past trades, that have been taken on all of this to just help buttress the point and just emphasize what we're looking for here. Okay, so here we have a trade that I took on EU a while back. So let me just explain this, and so we can just see how all of this, is playing out. So here you can see we have, let me draw this. Okay. Let me just make this conservative so we can zoom in. So let's see what we have here. So what do you see here? We have here high, low, inducement, price returns, sweeps the inducement, taps into this, and then sells off. Model B, okay, if you ask me. All right, as simple as that. Okay, and we can go through the charts to continue to look for, where all of this, at some point, the different models, played out. So my assignment for you is this: pick out any pair of your choosing, go to the market and just search for, all of this structure repeating itself over and over again, map it out, and just put it, in the comment section, and it will be, can just engage with other students, or I might even engage your post. So look at this one, for example. Here we have break of structure, price creates inducement, price returns, sweeps the inducement, taps into the supply zone, and is selling off. So that is something that happens again and again and again in the market. You'll see this over and over and over and over again. Okay, so just pick any pair and you just see this all over the place. Let's look at gold, for example, and see if we're going to see a similar structure that we can point to. Okay, so gold here, let's see what we have here. Okay, we don't have a perfect one there. Let's see what do we have. So this is just how you can just go through your chart, look for all of these opportunities, all of this structure that we're looking at in the market, And then yeah, so let's look at this. Look at gold, for example. Here you can see we had this structure here. Okay, high, low, price comes, sweeps that, taps into this, and then sells off. Okay, simple and straightforward, at least based on what we're seeing here in the market. And you can do this over and over and over again by just looking at all of the possible setups in the market that fit any of the models that we've looked at. And this happens over and over and over again in the market. Okay, so I think this is enough in terms of the models. We've looked at the 4 models of entry, simple and straightforward, no jargons, nothing. You just need to be able to identify the structure in the market and then you trade it. And I tell you, you're going to become successful in no time if you stick to the models, okay, without any deviation. So I want to believe you've picked a few things here. So I look forward to your success in the market, and also look forward to hearing how you implement all of this in the market. So without further ado, I want to say thank you so much. And I look forward to seeing you in the next chapter that we're going to be looking at. So hey, stay stuck in profit, and bye-bye. Cheers.